Well, the Zimbabwean market ended the day on a bullish note today, that with the industrial index hitting an all-time high of 226.96 points. Now, generally, the mood seems to be bullish in the market, with investors positioning themselves ahead of the impending election. So for more on the investment opportunities available on the continent right now, and we'll hone in on Zimbabwe because that market up 47% year to date. Simon Reid, head of Mara Africa Securities, joining me at the desk. Good to have you with us, Simon. Talk to me about Zimbabwe, because we've been talking about it the whole year. There's so much optimism. Are you surprised, or is it just a case of investors finally looking at valuations and saying they've just gone too low?
No, I think it's been a story unfolding over time. But the closer we get to an election, I think the more new investors certainly realize that Zimbabwe is probably heading for a more even dispensation regardless of the outcome of the election. I mean, economics is becoming more and more the thing that's running decision making, or will do in the future. We had a very successful conference in early June this year. It was the most well attended by foreigners that we've seen in the last 5 years. So I think a lot of those investors had their fears allayed to a certain extent, and they've now been coming to market. And there is a little bit of liquidity coming because we've obviously got some of the older Africa funds that have been in there for a very long time willing to let a little bit of stock go, and it's providing opportunities for those that want to come in.
Where are the obvious places you want to put your money in if you are trying to be a little bit more cautious, given, of course, there isn't any certainty when it comes to an election in Zimbabwe? Look,
it's like the rest of Africa, it's very much a consumer play, but there's been some heightened interest in banks of late. Barclays has been running very nicely. There's renewed interest in CBZ, notwithstanding the doubt over its NPL book, just on a pure valuation play. Barclays is obviously a company that can be geared up in any new dispensation. It looks like they'll sort out their indigenization problem. And once they get that balance sheet... I was going to ask you that,
because Standard Chartered, certainly Barclays has come under the firing line when it comes to
They have, but those companies have been in Zim for over 100 years. They know that shouting your mouth off is not going to win the day. Yeah. They will have got themselves into a pretty decent position. Again, the government and the Reserve Bank is not going to let banks like them get destroyed in any event. I think sense will prevail at the end of the day. And the valuations, although they're looking quite stretched, particularly on a stock like Barclays, when it switches on its balance sheet, it'll make up that high PE in a very short space of time.
Interesting to see how it does use that balance sheet, perhaps from the mothership, if you could call it that.
Correct.
Ben Bernanke is in focus today in global markets, and every time Ben Bernanke speaks, markets react. They want to know what he's going to do when it comes to quantitative easing, at what point in time their foot will come off the pedal when it comes to basically pulling back on that stimulus. How do you see all of this playing into African markets? Have you seen a pullback when it comes to foreign investors in the African continent? Do you expect a further pullback?
Look, I think we've seen a pullback, but I think the Ben Bernanke story about the pullback in QE rather lent some credence to those markets coming back from already high valuations. So it didn't cause a crisis, which is the good news. There's obviously room for those markets to come back a little bit more should QE become an eventuality, but any upside in the US economy should balance that effect out. And upside in the US economy is also going to lead to more money going into funds, and those funds will still be looking for value and for long-term economic growth, and Africa is really the place for that.
What are traditional offshore Africa funds doing with their funds right now? Are they investing more money in the continent? Is there a wait and see, a hold process taking place right now?
We're seeing a bit of a hold pattern. The globals are still obviously allocating money into the continent, but that's because they're trying to build long-term, very large positions. So that money tends to flow for a long period of time. But the traditional players have got a bought and hold sort of mentality at the moment. We are seeing that in the volumes. Nigeria is back down to sort of $15 million a day, Kenya to in the sort of $4 million a day range. That's where it was in sort of 2011, 2012. The interest is there, but people are being more careful about their levels of entry and exit now.
So what does that mean right now for your strategy in investing in Africa? Does that have any bearing on an Amara?
Look, it does, but we're quite comfortable that we researched the space quite deeply. And at 100 odd stocks in that space outside of South Africa and North Africa, there's still a very compelling universe for value investors, dividend yield investors, and so on. Because not everything is expensive, certainly not all at the same time. So We like the fact that we can probably pick out relative areas of value at any point in time, but a pullback in the markets is only going to help that story.
Because it has really been so much interest in the consumer story in Africa with, 1 billion odd and growing population. We know that many consumer-related stocks here in South Africa getting interest because of the African growth story as well. So have you pulled back from those stocks, taken some profit on them? I mean, what's your strategy with the likes of Nestle Nigeria, for example?
We have got sells on those stocks simply because their PE and their relative to mean prices are just way over the top. It doesn't mean we don't like the story. It doesn't mean that we don't think people should be following them. We just don't think we should be following them at these levels.
Yeah.
But the difficulty then comes in, if you're a sizable fund looking for a sizable position, selling stock just because it's expensive is a difficult thing to do, because getting it back lower down in the required size is always a problem.
Yeah.
So that's why there's quite a hold strategy in place at the moment.
So if there is a pullback and an opportunity to get into the stocks that perhaps have been a little bit more expensive than you would have liked, where are you looking right now? Apart from consumers, I mean, where are the valuations looking attractive right now?
Look, if you go on a country by country basis, they're looking most compelling in Zim. Bearing in mind that Zim is really a story of, excuse me, maybe 15 stocks that you should be concentrating on. But Zambia is also still not looking horrendously expensive. Botswana, it's fairly expensive, but it's still not up there with the Kenyas and Nigerias. And those markets are obviously more expensive because they attract larger portfolio flows. And Malawi is another interesting case for those who fear to tread. For a long-term investor, there's some very compelling value there. But it's going to be difficult to extract in the short term.
Yeah, I mean, completely. And you see even arbitrage opportunities with a country like Malawi because of the lack of trading that takes place there.
Yeah, look, it's. I wish we could arbitrage some of the things, but yes, it is a place. If you've got a lack of funds, I would be lightening in the bigger markets and going longer there. But most of the funds around, when you go into a country weighting basis, it's a small amount of money that goes to Malawi, and they're quite happy to go and just tuck it away there and leave it and see what happens.
Very quickly, you've launched an opportunity for investors or retail investors to get exposure to Africa. Tell us what type of interest you've seen in Africa Direct.
We've actually been doing it for a while, and we've in this sort of year, in the lead up to when we officially launched it, we put somewhere between 150 million and 200 million rand out there. We're dealing with 5 to 10 new queries a day now that we're teaching the market that it's available to them, and they can go directly into stocks of their choice. The key to all of that was building the custody, which is quite a lengthy and difficult process, but that's all done, and we can now hold shares on behalf of clients in all those countries in reputable banks, so the security aspect of their holdings has now been taken care of.
Minimum investment needed?
We haven't really got a minimum investment, but we wouldn't recommend that you go in with less than 50,000 Rand, because with money moving through the banks and so on, there are set statutory charges there that would make it very expensive for somebody who wants to put in 10,000 Rand.